Welcome in this video. When is the Xcn coin explosion? We will analyze it. Don't forget to subscribe and like, and please watch to the end to understand. Looking at the overall structure on the chart, it is possible to see that the price is clearly forming a flag pattern. This pattern is characterized by a short period of sideways or slightly downward consolidation following a strong uptrend, which is common in technical analysis. The price usually spends this period in a channel, which resembles the fabric of a flag. The strong and steep rise preceding this structure is considered the pillar of the pattern. This integrity is called a flag pattern in technical analysis and is considered a highly reliable continuation pattern. On the current chart, the flag pattern can be identified quite clearly. That is, the price first made a sharp rise and then started to move horizontally or slightly downward within a certain band. This is a transitional period when traders sell profits, but the overall trend has not yet changed its direction. In this process, the price buys time and invites new buyers by moving away from the short-term overbought zone. Technically, such squeezes represent potential energy accumulation and usually result in strong moves towards the breakout. In particular, the fact that the price has approached the upper band of this flag pattern draws attention to the possibility of a renewed upside move. If the price is able to break this upper band on volume, the technical target of this pattern could be as high as the flagpole. This is a very positive and opportunistic development for traders. This is because such breakouts are usually supported by an increase in volume and bring about sudden spikes. Bullish breakouts are strong signals that the market is psychologically ready for a rise, not just technical indicators. Flag patterns also provide promising signals for the sustainability of the current uptrend, as they tend to continue in the direction of the trend. So when the pattern is completed, the price may not only reach its target level, but it may also mark the beginning of a new uptrend. This is because in this process, new investors joining the market will also take action, and fundamental and technical developments that support the uptrend will push the price up. In this context, the fact that the price is currently hovering quite close to the upper band of the flag pattern is an extremely positive technical development. If the price breaks this level and persists above it, a clear bullish momentum could build on the chart. At this point, the most important detail that investors should carefully follow is whether the breakout is voluminous. Because it is not just a linear breakout, but breakouts with a strong buying volume behind it are much more reassuring in terms of persistence. To summarize, this flag pattern suggests that the uptrend has been digested in a healthy way with a pause, and the market is about to regain momentum. If the price breaks the upper band of this pattern upwards, we can expect a technical target as high as the flagpole. This indicates serious potential. The technical outlook supports the reliability of the pattern and the upside expectation. In addition, these types of structures are not only visible on the charts, but also in investor psychology. This is because in such squeeze zones, there is an air of indecision in the market. But when this indecision results in buyers becoming dominant again in the long run, sudden and effective rises are experienced. In this respect, flag patterns provide important signals for both short-term traders and medium to long-term investors. Therefore, the current technical outlook of the price is very promising. The upper band of the flag pattern is being tested, and if it breaks with a strong volume, there may be a serious upside potential. For this reason, it should be carefully monitored whether the formation structure is preserved intact in the coming period, when and under what conditions the breakout occurs. Because when this breakout occurs, it is extremely likely that the upside technical target will work and the price will reach the potential offered by the pattern. But we cannot decide the analysis only with the pattern. Let's look at the other metrics. Keep watching. Technical analysis of the chart clearly shows that the current price action is in line with the Elliott wave theory. The current outlook suggests that we are still in the early stages of the five-wave bullish pattern described in the theory, meaning that potentially much stronger moves may await us. In particular, the fact that the price is following a horizontal course in the second wave is an important signal supporting this theory. Because in the Elliott wave structure, after the rise that usually starts with the first wave, the second wave is a correction and relatively more stable. This can be considered as a temporary pause in the market and a power-gathering phase. The second wave usually occurs when investors take profit realizations after the sudden rise in the first wave. During this wave, many investors remain indecisive. Some may think that the uptrend is over, while others start looking for new buying opportunities. However, the second wave is always limited to a temporary pullback or sideways movement, and the market revives with the third wave. The fact that the price is currently moving sideways is exactly in line with this second wave nature. This sets the stage for a positive expectation going forward. The third wave is considered to be the most noticeable, hardest, and strongest bullish wave in Elliott theory. This wave, which usually has the highest volume and the widest price movement, is a period in which large masses of people start to get involved in the market, investor confidence increases, FOMO is triggered, and fundamental and technical indicators give positive signals. For this reason, the third wave often becomes one of the main building blocks of a trend. This strong structure, together with the energy accumulated in the second wave, leads to a very accelerated rise. The fact that the price is currently preparing to move into this third wave creates a positive technical expectation. According to calculations made in technical analysis, the third wave usually has a minimum size of 1/618 times the first wave. This ratio is not only a theoretical level, but also a strong technical prediction based on Fibonacci ratios. If this ratio is exceeded, the target level can be moved even higher, up to 272 times. These levels could move even higher depending on the wave's momentum, breakout severity, volume support, and overall market sentiment. In other words, the third wave is not only a short-term bullish event, but it also plays an important role in determining the direction of the big picture. Therefore, from where we stand, it is highly likely that the price will not only rise, but also start a serious trend if the third wave is initiated. The fact that price movements are currently flat in the second wave should be interpreted as a natural and healthy development, because in order for a strong third wave to form, the market needs to breathe, correct, and regain strength. During this transition period, it is quite normal for volumes to fall, the price to consolidate in a narrow range, and sometimes to experience pullbacks. However, the third wave that follows this process is one of the phases where investors gain the most. Therefore, the current calm can also be characterized as the calm before the storm. The MACD indicator is currently displaying a bearish trend. Notably, the gap between the MACD line and the signal line is beginning to narrow, which could signal a potential reversal. Analyzing how the relationship between these two lines changes over time can provide critical insights for investors. Although the MACD line is currently below the signal line, if a bullish crossover occurs in the near future, it could be interpreted as a sign of positive momentum in price movements. Such a crossover would be a strong indication that market momentum is shifting back toward the buyers. Especially when compared to past price movements, similar formations in the MACD lines have often produced strong signals that prices are beginning to move upward. This supports the idea that the current outlook is promising. Additionally, the histogram bars are starting to shrink, even while still in negative territory, which is another important signal that the downward momentum is weakening and a trend change might be approaching. In such a situation, it is important for investors to remain patient and closely monitor how much the MACD lines are converging. A possible bullish crossover could indicate the start of an upward move in the market, making it a significant entry signal for many investors. Moreover, the MACD approaching the zero line suggests that momentum is reaching neutral levels and the market may be preparing to choose a direction. Taken together, all these signals strengthen the possibility that the current downtrend may be coming to an end and could be replaced by an upward move in the short term. If the MACD makes a bullish crossover in line with price action, and the histogram begins to move into positive territory, it could help restore optimism in the market. We should patiently wait for the crossover to occur. Yes, friends, I hope you liked the video. If you subscribe to my channel and like the video, more videos will be coming. Be careful in your investments, analyze the risks correctly, and always take strategic steps. I will be with you with different analyses, investment opportunities, and technical information in my videos. I wish you all a lot of profit. See you soon.